Okay, thank you everyone for making it to this webinar about long-term care insurance. My name is Carly Ebenstein. I'm an independent broker, and I've been working in the insurance industry for the last 30 years. I've covered many areas, including health insurance, disability, life insurance, long-term care. I've also taken the financial planning course through UC Berkeley Extension. And what I tell people is that it gives me enough knowledge to make me dangerous. But basically, I'm an issue spotter. And so I know when somebody needs to speak with an estate planning attorney. I know when somebody should be talking with a tax advisor. And I can pinpoint, those areas. But my real passion is with long-term care insurance. And that's what brought you here today. Okay. So we're going to backtrack a little bit. So these are all the things we're going to cover. Medicare, what is long-term care, how people receive care, planning ahead, different options. We're going to talk about the Pension Protection Act, deductibility of premiums and scenarios, and questions. And I ask if you have questions or anything you'd like to talk about, that you put it in the chat and we can cover that at the end. I also want to remind you that in the chat, there are some links that might be of interest to you, including the cost of care calculator, where you can look at what care costs across the entire country and project into the future. You can also download the plan of care document we're going to look at, as well as you can make an appointment to talk with me if you'd like to discuss anything privately. So what exactly is long-term care? Hear these things. We hear this term used very frequently, and I'll just mention the activities of daily living is a pillar of any topic of long-term care insurance. Maybe you've heard that term, activities of daily living, or ADLs, but anything that has to do with long-term care insurance is going to encompass the activities of daily living, which are walking, transferring, that means getting out of a bed or a chair, bathing, continence, dressing, and eating. The way I remember these is I think all of these things happen and then basically in the first hour of waking up. And the reason why I have the word balance here is because balance affects walking, it affects transferring, it affects bathing, and it can affect dressing. So balance is actually a very important aspect. And the reason it's important is because the way to receive benefits from any long-term care policy is that you have to have problems with at least two of these activities of daily living. And when I say problems, I mean you can't do them safely on your own. You need some kind of assistance, whether it's personal assistance or physical assistance like a cane, or a wheelchair, or some type of physical assistance like that, a ramp. And so if you have problems with any two of these activities of daily living, your claim will be approved. Some people don't have problems with these activities of daily living, but they have a cognitive impairment. And in that case, a person will receive benefits. And so you can be physically very, very healthy and be able to do all of these things without a problem. But if um, there's an issue of executive functioning, things like leaving the stove on, not being able to follow your finances, wandering, letting strangers in, things like that. Um, Anxiety about, like, a constant anxiety be about unnecessary things. I actually have a client now whose mother has cognitive decline, and apparently she has incredible anxiety about money, even though he has made it very, very clear that there's no issue with money. And I told him that, well, he's trying to address a medical and emotional issue with a rational response, but you know, she's ready to receive benefits. What some people don't realize is that a long-term care event can happen to anyone at any time. It's not just for people who get older. It can happen to someone who's in a car accident. It can happen to just tripping over the sidewalk. I mean, one time I was walking my dog who lunged and I popped a rib. That would not be a reason to receive long-term care benefits, as painful as it was, but it just showed me that things can happen at any time. Care can be received at home and most likely will be received at home, at least for part of it. And most people don't realize that. They think of long term care as services that are received in a facility. And also, services can be received temporarily, like in that accident example that I gave. Sometimes people have a really bad car accident. I mean, even breaking a pelvis or, having multiple breaks, but that doesn't mean that they'll be on claim for the rest of their lives. Maybe it's for several months. And so that's something that most people don't realize. And then I just put that fun fact about 1 in 10 strokes that people have are under the age of 60. So I just mentioned that long-term care doesn't necessarily mean receiving care in a facility like assisted living. And we can see that 80% of care is actually received in a home setting. So if anyone wants to share, um, I'll just give you a minute to consider if you've talked about any kind of planning with your family and what it might look like if a long-term care event happened to you or a loved one. And no pressure, but feel free to share because we always learn from each other. This is a plan of care document that was sent to you ahead of time. It's also available on my website, and anyone is available to download it. They're not going to be hassled by me. They're not going to be nothing. I mean, I won't even know. I'm not even tracking that. And this does not mean that somebody has long-term care insurance. It's just about making a plan, um, which your loved ones will be very grateful for, especially if you're not in the position to provide direction. And it's just a document that a financial advisor asked me to create to help their clients. So this financial advisor has this as part of their onboarding documents so that they actually know, whom to contact, what kind of resources are available. Um, it's really just about, getting organized. So there's a lot of planning and talk about retirement and planning for retirement. And people are very concerned about their assets and increasing their assets and building their portfolios. But there are really three main ways that a nest egg will be reduced, and that's taxes, inflation, and long term care expenses. And out of all those three, I can assure you that while it's growing and it's getting more attention, long term care expenses are given the least amount of attention these days. This is a snapshot from that cost of care calculator that I um, provided the link for in the chat. And I just wanted to show this because we can see I took California and another state, Georgia, and these are different types of care that people receive when they need assistance. And I wanted to show what the average cost is today, or actually last year, 2024, in California, and what it's projected to be 20 years from now. And then I took the same thing for Georgia, which is another state that most people assume its services are going to be less expensive, and they definitely are. But one thing I've found is that most people are surprised that there isn't more of a differential in costs. And I usually switch these states around. It could be, Ohio or Texas or some other, Montana. These are states that I hear people might retire to, might leave California and move to a different state. And while they'll likely save money, of course, it depends where in the state somebody is moving, it might still be more expensive than they imagined. So that cost of care calculator is very handy. So having long-term care insurance means having a pile of money, of tax-free dollars, to pay for all types of care, whether it's in a home, a facility, or adult daycare. And that makes a difference because I've talked to so many people and they say, "Oh, well, I have enough money, to pay for my care." And it's true, maybe they do. I have some very wealthy clients, but when they realize that they're going to have to sell an asset, there's the tax issue, and there's also the issue of what that asset might be valued at um, in today's dollars. Like if there's a downturn in the market for any reason, they might get hit with a double whammy, a tax bill and also an asset that's not worth as much as they expected. And so long-term care insurance is basically hedging against those things and paying for your care. I think of it as discounted dollars. I get lots of questions about Medicare. And like my own father actually many years ago said, "Oh, Medicare, we've got Medicare, it'll pay for it." Well, Medicare actually won't pay for like 99% of long-term care expenses. It was created in 1965 and it was designed to help people get better. So it's fantastic for if somebody has a heart attack, or even it's fantastic for people who happen to be diagnosed with any of these um, illnesses. But it's it care. It covers medicine. It covers medical attention. Part A is for hospitalization. Part B is for doctor's visits and labs and things like that. But if somebody has any of these um, diagnoses like Parkinson's, Alzheimer's, stroke, or chronic arthritis, and I could have put more, but there's a good chance they're going to need additional help that is not covered by a medical provider, which means it won't be covered by Medicare. It's not going to pay for someone to come to the home and help with those activities of daily living. And so Medicare is great. And I know, like, of course, so many people would like to be on Medicare before they actually qualify. And it's fantastic for medical insurance, but it's not it doesn't check the box. It doesn't qualify. It's not going to satisfy what somebody needs if they need long-term care services. So I think this slide is very funny because it actually represent a certain small, used to be bigger, but it's a smaller aspect of people, smaller percentage of people that I talk to who just say, "I'm never going to need care." And, people, use some extreme examples and things like that. But the truth is that most people actually do end up needing some level of care. And then aside from the person who needs care, it's really the caregivers that end up scrambling and paying the price and maybe working less than they need to or could, or spending less time with their kids, or doing some things enjoyable. It's really not it is for the person that needs care, but it's as much for caregivers. That's what long-term care insurance is for. And so what are the chances? Here's some statistics from the New England Journal of Medicine. And I mean, the chances of getting into a car accident are 1 in 240 versus having a long-term care event over age 65, which is actually 1 out of 2 women over age 65 will need some level of care, and 1 out of 3 for men. Here are some medical statistics just about Alzheimer's and osteoporosis, which can also affect someone needing long-term care assistance. And so the reason to consider purchasing long-term care insurance are, I've just listed some reasons below, and some of them that stand out to me are, the benefits are received tax-free and the support that it gives to caregivers. I mean, I've known people on claim where they're receiving long-term care benefits with a lot of support from family, because maybe the family wants a person to be at home the entire time, and maybe they want to be involved. They're not just looking to outsource care, but they need some help. They need some support. And so long-term care insurance can definitely help with that. These are just some of the benefits. Um, there definitely are, government tax incentives that I'll get to. It really helps give people more of a cushion so that they have more choice in the type of care that they receive. It supports caregivers and also the ability to receive and afford care at home. Believe it or not, sometimes home care is actually more expensive than going to assisted living. So maybe you've heard about the Pension Protection Act, maybe you haven't, but it's pretty significant because, well, significant for some people. Some people have old life insurance policies that have outgrown their usefulness. So, for example, I had a client that had a life insurance policy that her parents purchased when she was a young child, like under 10 years old. And she had this life insurance policy, which was great when she had a family and she had kids that she was concerned about and people that were depending on her. But her kids were grown and they were independent and doing well. And there really wasn't anyone financially dependent on her. And so she had this life insurance policy that had built up a cash value of over $100,000. And due to the Pension Protection Act, we were able to take that policy that had a $100,000 cash benefit and transfer that to a long-term care policy that was now going to be of much more use to her now than the life insurance would be. And so the Pension Protection Act allows you to do this with life insurance and annuities tax-free and take that cash value. If you have a term policy, uh, it's not the same, but I can talk to you about some creative ways to get cash out of your term policy that may not be tax-free, but may still benefit you in terms of funding a long-term care policy. There also are financial incentives for business owners, depending on the type of business they have, whether it's an LLC, S Corp, or C Corp. They can deduct the premiums. The business can pay for the premiums for their long-term care policy, and they can receive the benefits tax-free. Now, depending on the type of entity a person has, depends on the deductibility. C Corps have ultimate deductibility. S Corps and LLCs have deductibility, but whatever you deduct is going to be added to your income. So for some people, that makes sense. For some people, that doesn't, but it is definitely a benefit that individuals don't have. For individuals, if you're itemizing your taxes, then depending on your age will correlate to the amount that you can deduct from your premium. But you do have to be itemizing your taxes. And this is one of those areas where I know enough to be dangerous. So always check with your tax advisor when you're making a decision. that includes your expectation about deductibility. So I always get this question about when's the right time to apply for long-term care insurance. And I always tell people it's when you can get approved. There's a saying in my business that money pays for it, but health buys it. And I have plenty of people who I've had to tell them that they needed to wait to apply due to really seemingly insignificant things like tennis elbow. Um, or sometimes people think it's not important if they went for physical therapy recently if they're not paying for it. If somebody else or a third party, like a hotel or something from an accident, somebody else is paying for it. But it's all important. And so when there's a small, when there's that window of opportunity when you can get approved, I think it's always a good time to consider applying. So here's an example of a couple that I worked with several years ago, Rich and Judy, where this is kind of a typical scenario where one person is saying they don't want to be a burden on the children, maybe dementia runs in the family. And then another person might be a counterbalance and be reluctant. And they're concerned that purchasing long term care insurance will be a waste of money, which is kind of ironic because the chances of needing this as opposed to their homeowners insurance for something significant or car insurance for a serious accident, you know, those chances for needing it for long-term care are actually larger. But regardless, we can still design a plan that will address both of those concerns. And so in this case, I still recommended purchasing a policy, especially since one of the Judy's concern was being able to pay for and physically help her husband if he needed assistance. And to address Rich's apprehension, I suggested that they purchase a policy that has a share care benefit. And what that is it allows them to actually share each other's benefits. So if one person passes before utilizing their pool of money, and I'll backtrack on that in a second, then it would go to the other person and it wouldn't be a waste of money. Um, and by pool of money, that really just correlates to the plan design. So if you're curious about what that means and you want to find out more, that would be a reason to schedule a one-on-one because that's where I get more into the specifics of how plans affect or can be designed for specific individuals. Another scenario is a business owner. In this case, I put this person who doesn't have children, which is kind of funny because people who do have children always say that they don't want to be a burden, but people who don't have children always say, "Well, I don't have children, so I should get this type of insurance." But nonetheless, regardless, a lot of people do recognize how expensive long-term care services are, and so they're kind of unsure about like how that would work if they needed services. And as a business owner, sometimes those small business owners are wondering, like, well, is there something that they can actually offer to their employees? So in this case, with this particular sample client, I suggested a hybrid plan, which is a hybrid with life insurance. And many times when I bring this up, most people will say, I already have life insurance or I don't need life insurance. And I tell them nobody buys this for the life insurance. They buy it because hybrid plans have fixed premiums, but will never go up as long as you have the plan. In some cases, some people will want a plan that they can pay off in a specific period of time. And in this case, I have clients actually, who are on what's called a 10 pay, where they're paying this off through their business over the course of 10 years. So they can deduct the premiums because their business is paying for it, and they can receive the benefits tax free. And then in some cases, some employers will decide to offer kind of a starter plan, not the same level of plan that they have for themselves, but something that's less expensive or something that their employees can also afford to chip in so that they have something. And that would be a plan that they could take with them if they leave the company. And this is actually a new development in the long-term care sphere because it used to be that you had to have a company of at least 50 employees. And now we can actually get companies with as few as 2 employees to get one of these starter plans. So we're at towards the end and almost ready for questions, but some food for thought is just for something for you to think about. If you needed care today, what would that look like? What would happen? And where would you be accessing those funds to pay for services if it was hypothetically $7,000 a month, month after month or year after year as price of services increase? It's just something to think about. So I'm going to stop this screen share and go to questions and open up the chat. Okay, no questions yet. Um, well, I can start with a question that I always get. Um, oh, okay, there were a few people who couldn't make it and they had some questions. Okay. What happens if I purchase a plan in one state and move to another state? Um, that's not a problem. The interesting thing is if you purchase a plan in one state, let's say it's California, and then you leave that state and move, I'm just going to say North Carolina, because I actually did have family that did that. What happens is the plan is actually governed by the state it was purchased in. And that what by governed, I mean the Department of Insurance is that plan has to kind of follow the rules of the Department of Insurance from that state. And in most cases, I mean, not most, in all cases, there's no issue in receiving benefits. Um, it just means for hypothetically, like if there's a plan increase in California and a person is in North Carolina, that plan will be subject to a premium increase, even though that's not happening in North Carolina. There are other kind of interesting things like, just other things that are specific to states that are more housekeeping, but it's not a problem. And what age can you get LTC until? That's a really good question. Um, So for regular traditional plans and hybrid plans, the age is about 80 years old. Um, there are annuities that will actually go later, special annuities that have long-term care benefits, and those will go past 80. Uh, but I would never want to discourage somebody from trying to receive this type of care or try to fund this type of care, they should contact me because so much depends on the state that they're in and what types of plans are available in that state where a person is living. But thank you for that question. And let's see. Oh, I'd like to be able to pay family and friends to help me. How can I do that? Okay. So in general, most plans exclude being able to pay immediate family. Um, and so that's something that's very helpful for me to know because there are plans that do allow that. And so if that's something important, like I'm taking an application for a woman next week who is planning, she lives in Colorado, she's planning to move to Kansas where her family lives because she knows that they are going to want to crowd around and help care for her. And she wants to be able to pay them for their time since they'll be taking time away from their jobs. And in that case, she's getting a plan that pays a cash benefit. And when you receive a cash benefit, you can use that money in any way you want. You can pay family. You don't even have to use it for care. You can pay your mortgage. You can do anything you want with it. If you're not using the full amount of your monthly benefit that you've purchased, you can actually take the difference and invest it or put it in a short-term CD. So when you have cash, you have ultimate flexibility, and there are some plans that pay cash benefit, and that's something that people should know about, and that's why it's helpful for me to know. Like when I am working with new clients, I ask so many questions, and sometimes people don't understand why I'm asking all the questions, but I'm really just trying to put all the pieces of a puzzle together, including that. Um, while unclaimed, does LTC plan help fund home alterations to help with ADLs? Yes. Um, when someone is on claim, even before, like while a claim is being processed, like you can actually let insurance company know that you will be needing some home modifications, not like a bathroom remodel. That's not going to happen. However, most all the plans actually have allowances for things like ramps, grab bars, um, lifts, stair lifts, or chair lifts. I saw one company, Genworth, actually paid out $5,000 to build a custom-made lift for a client. Um, there's medication trackers. They'll pay for that. There are some grab bars aren't, particularly expensive, but it will pay for that. It will pay for a shower bench, and that's some of them are actually pretty fancy. They're not just like a simple shower, seat that you place in a shower. Some of them are actually much more fancy, and the insurance companies do have an allowance for that. Is LTC available when you're in country only part of the year, approximately 6 months out of the year? Um, I think the question is, if you're only spending 6 months in the United States, can you still get long-term care insurance? And I believe the answer is yes. And that's something I would actually need to follow up on. But that is an example of where someone would definitely want a plan that pays a cash benefit, uh, so that you could actually also pay for services outside of the country. But I believe the answer is yes. Um, Trying to think of any other questions that I typically get asked. How long does it take if somebody applies for long-term care insurance? And I would say so much depends on a person's age and their health. So, for example, anyone who's over the age of 60 is likely going to have a cognitive exam included in the process. And so that naturally just takes longer just because it has to be scheduled. People who are, taking medications, several medications, or have had recent things. If somebody had, like my client who actually had a metal bar fall on her head and the hotel paid for physical therapy and all that stuff. The fact that this happened 6 months ago means that the insurance company asked to see the physical therapy records and the medical records for that because it was so recent. How early should one get LTC set up? Well, that's the question of money pays for it and health buys it. I will tell you that I now have clients who are applying for it in their 40s, which is definitely on the young side. Um, but the younger you are, the more it makes sense to get a hybrid plan since the premium will be fixed and you won't have to expect multiple premium increases. The older you are, the more expensive a hybrid plan will be. So the younger you are, more than the age of when you should apply, I would say, what type of plan would you get? If parent is 80 and does not have LTC, what should the next steps be? If a parent is 80, um, I'd love to talk with them and find out about their health, one, and also, what their finances are. Because, for example, if they have that life insurance policy with a cash benefit, or they even have some money in their IRA where you can actually now use qualified funds to pay for long-term care insurance tax free. So you don't have to pay taxes on it. That can be a way. So typically, as what the older somebody is, the more difficult it is to medically qualify. But if there's some way to fund that, with some creative options, that can be interesting. Also, depending on the state they're in, meaning the physical state where they're located, their short-term care could be an option where you're basically just buying care for 1 year. 1 year for home care, 1 year for a facility, and I call it the better than nothing approach. But I also have clients that are using that to supplement their long-term care policies. So I definitely would want to talk with a person who's 80 years old. If anyone has questions and like to, oh, thank you, Steph. That's my assistant. If anyone has questions, who would like to talk about your particular situation, please feel free to schedule an appointment. I don't charge for my time.